Hello and welcome to another edition of Stockwatch, the final Stockwatch of the trading week, and we're just hearing some more filters through about excuse me, the earnings season that's currently upon us, and it's time the turn now of AT&T and Intel. AT&T did post a positive subscriber growth in Q3, but it seemed to be priced in, and investors were a little bit worried about or questioned some of the impact of promotion of the company's growth, which led to a little bit of shares declining by the end of the trading session, and also up until extended trading yesterday. So when the market does open, we are expecting a little bit more of a dip down to the downside for AT&T. So we had a growth of 1.22 million net additions in the third quarter, including almost 1 million postpaid phone net additions as well. But as I said, it seemed to kind of weigh on the minds of traders and investors in AT&T, as shares did take a little bit of a tumble. Not only that, Intel shares actually fell in extended trading almost 8%, which is quite significant. Well, it will be a significant drop when the market does open later today, and this is because it did not meet company expected reports for the last quarter, and it did blame the industry-wide component shortage in its PC chip business, which has led to the company shrinking 2% in the last quarter as well. So, this ongoing chip component shortage seemed to be not only in computers, but also in automobiles as well. The CEO said the semiconductor shortage is that we're in the worst of it now, and every quarter next year will get better, but they're not going to have supply-demand balance until 2023 at the earliest. So quite a bold statement from the CEO. Their earnings per share was 171 versus 111, and but their revenue was down almost $500 million, so quite significant there. So let's see how it's going to affect stock prices. So AT&T here, we've had this descending channel ever since the point where they said they were going to do a merger with the Discovery channel, Discovery, to form a new standalone company. So we've had this descent to the downside. I'll just put a channel in there because it's going to be a little bit more obvious in the near term. So as you can see here, we're actually falling through the channel, picking back up now. I'll zoom in just for a better clarification, and obviously with the help of the Ichimoku cloud, which is just what I use just to see what the potentials are for entering and exiting positions. As you can see, the cloud is kind of bouncing off the top level anyway, and if we keep going the way we are going, then we're going to fall into the quite vastly lower than the Ichimoku cloud as well. So we'll see if that comes into fruition, as well as we just try and pick up to the mean reversion, but it's looking a bit wayward for AT&T. We're looking on the 4-hour chart now, and as you can see here, again, not really much has changed. Not really many good opportunities to the upside. Bulls will be rubbing their hands together at the prospect of further downside for the stock, as the only pickup I can see is if we can get a hit at the mean and then another move higher like we have done in previous sessions. But this is a very heavy resistance zone, and it's getting lower and lower. So it was additionally roughly about the almost $28. Now we're looking at the $27 mark. So we'll see if that comes into fruition, as well as we go into what could be a very decisive last quarter for a lot of companies, and to see if their profits can pick up. Intel, on the other hand, they have been in quite a choppy pattern for some time, breaking the Ichimoku cloud here on the daily chart. However, with this 8% expected drop, we are looking at we could be hitting lower than the $50 mark, which is quite significant as well. But we'll see what happens when the markets open. Obviously, extended trading is always precarious, because one company or one news outlet or one website is saying one thing and another thing, and then the stock opens and then it might not be as bad or significant as what has been reported. So just keep an eye out for those kind of headlines as well, because it could affect your trading psychology if you are trading these big stocks as well, especially during such an important time such as earnings season as well. So here, as you can see, we are looking for a bit of exhaustion, which we probably will get at when the market does open, but just how far down we go, we'll have to wait and see. Obviously, there's a nice support here, roughly about the $52 range. The Ichimoku cloud is very, very thin here, which means it won't take a lot to pierce it if prices do open on the downside. So I'll just be looking at some good opportunities, you know, when the market does open shortly. If we can see a little bit of more downside, we can put some nice stops in to try and get those particular positions and hopefully make some profits. So that's all from the Stock Watch today. Thank you very much for joining me. As usual, any comments or queries, please feel free to add them to the post and I'll get back to you as soon as possible. Have a great trading day ahead and have a great weekend ahead, and bye for now.